Bitcoin recovery slows down as whale inflows remain elevated. The latest recovery rally in the price of Bitcoin has now slowed down as on-chain data shows signs of dumping from whales. Bitcoin exchange whale ratio continues to be at high values. As pointed out by an analyst in a CryptoQuant post, BTC whales are sending their coins to exchanges at the moment. The exchange whale ratio is an indicator that measures the ratio between the sum of the top 10 transactions to exchanges and the total Bitcoin exchange inflows. In simpler terms, this metric tells us how the whale transactions, that is, the 10 biggest transfers, compare with the total amount going into exchanges. If the value of this ratio is high, it means whales are making up for a large part of the inflows right now. Such a trend can be a sign of dumping from these whales, and thus can be bearish for the crypto's price. On the other hand, low values of the indicator imply whales are making up a healthy part of the inflows currently. This trend can prove to be either neutral or bullish for the value of BTC. Now, here is a chart that shows the trend in the Bitcoin exchange whale ratio over the last few months. The 72-hour MA value of the metric seems to have been high recently. Source: CryptoQuant. As you can see in the above graph, the Bitcoin exchange whale ratio has stayed at pretty high values in recent days. Generally, the indicator's value remains less than 0.85 during bull markets, while it stays at higher values than that in bear market periods. The current value of the ratio is above 0.90, which means more than 90% of the exchange inflow is from the 10 largest transactions right now. This can be a hint that whales are dumping at the moment. Bitcoin attempted a recovery rally over the last few days after hitting the low below $18,000, but the run has now slowed down as the value of the coin now looks to be moving sideways. This halt in the move may possibly be because of selling from whales that the exchange whale ratio is signaling right now. At the time of writing, Bitcoin's price floats around $20,700, down 2% in the last 7 days. Over the past month, the crypto has lost 31% in value. The below chart shows the trend in the price of the coin over the last 5 days. Looks like the value of the crypto has been consolidating sideways over the past few days. Source: BTC on TradingView. Bitcoin miners contributing to BTC crash? New report sheds light. Bitcoin remains in the red with a 10% loss over the past week. The number one crypto by market cap has been consolidating at its current levels after a massive crash to a multi-year low of $17,500. At the time of writing, BTC's price trades at $20,400 with sideways movement in the last 24 hours. As many outlets have been reporting, Bitcoin miners have been reducing their BTC holdings. This has contributed to the selling pressure and to BTC's price plunging to its current levels from the $30,000 area. A recent report by analytics firm Coinmetrics looked into BTC miners' addresses and funds flow to pin down Bitcoin's crash real impact on the sector. As the firm claims, the process of tracking down BTC miners' addresses can be difficult, despite the transparency of the blockchain. In order to get a clear picture of current miners' BTC holdings, Coinmetrics labeled the addresses which have come in contact with mining pools. These miners combine their resources and split the rewards for including a block in the blockchain. Miners pool their resources because they have a bigger chance of receiving the rewards. These pools interact with BTC addresses which Coinmetrics called zero-hop miners, and then the split rewards go to one-hop address or miners. As seen below, the firm was able to discover that there are 2.9 million one-hop miners, but this is the total number of addresses for every entity that has ever mined one BTC. The number has been on a decline since January 2021 when the sector became more industrialized. In that sense, active Bitcoin miner addresses interacting with the mining pools total 34,000 in 2022. a much smaller number when compared to its all-time high, and with 2021 when these addresses stood at 92,000. Bitcoin miners reduce holdings, but remain bullish. The total number of one-hop BTC addresses have been dumping their Bitcoins since July 2020. This metric inversely correlates with the price of BTC. While the cryptocurrency rose, the BTC supply held by these addresses trended to the downside. These entities have sold at least 500,000 BTC from that period until June 2022, impacted by price volatility. As seen below, active miners have been reducing their supply as well, but only sold around 25,000 BTC. Coinmetrics analyst Parker Merritt added the following to the recent findings. While most miners prefer hodling, last week's market turbulence threw many miners for a loop. With the wick down below $18,000, several companies became forced sellers, liquidating their BTC treasuries to minimize the impacts of a margin call. There is an uptick on the chart above, which could translate into a new period of BTC accumulation from miners. Overall, less leverage in the crypto market could contribute to healthier price action. Thanks for watching. Please subscribe and click the bell icon for more news update.